In this video we are going to talk about 10 dividend stocks that will pay you while you sleep. So before starting, please like this video and subscribe to this channel for our future updates. Short-term market volatility is common. In the long term, however, stocks outperform other financial assets like bonds and cash. That's especially true when interest rates are low. Government bonds and savings accounts offer such low interest rates that they can't generate acceptable returns or satisfy retirement obligations. So, to bridge the income gap, investors are turning to dividend equities. But not all income stocks are equal. These enterprises often have weak balance sheets and struggle during recessions or disruptions. During the COVID-19 pandemic, several erstwhile dividend stalwarts had to reduce or cancel dividends. Don't just go for the highest yield today. It's critical to consider both present and prospective revenue. These 10 dividend stocks to buy in 2022 can help an income portfolio. Number 10. South Jersey Industries Inc. (SHE). From the west to the east, South Jersey Industries is the largest dividend stock for 2022. South Jersey principally runs two New Jersey gas utilities. One, as the name implies, covers the state's south. The other is about the NYC suburbs. South Jersey moves slowly. South Jersey's population growth is slow compared to New Jersey's. But most income investors probably don't mind. A PE of less than 15 is a bargain in South Jersey. Until 2022, shares provide a 5% dividend yield. The stock is down around 15% from its 52-week highs, making it a good buy. Number 9. Northwest Natural Gas Company, NWN. Utilities aren't the most glamorous stocks. People don't discuss power companies at cocktail parties. Diverse income sources are often overlooked by dividend investors. Northwest Natural is another dividend king, with a 50-year dividend rise streak. The Portland, Oregon-based natural gas utility has benefited from the recent boom in the Pacific Northwest's economy and population. In 2021, utilities underperformed the market. Investors devalued utility stocks due to concerns about rising interest rates. However, Northwest Natural stock price is down almost 30% from its pre-pandemic peak, and it pays a 4.1% dividend. That should be enough to persuade some income investors to choose it over a bond or a bank CD. Number 8. 3M Company, MMM. 3M is the epitome of a dividend-paying firm. 3M is best known for its Post-it notes, but it also makes a wide range of consumer and industrial products. Among other things, 3M manufactures insulation, lubricants, medical supplies, personal protection equipment, dental tools, and cleaning supplies. 3M is an excellent way to invest in the American economy as a whole because of its wide range of products. As 3M continually expands its revenues and earnings decade after decade, its extraordinary diversification makes it a foundational portfolio asset. As a result, it has increased its dividend for almost 50 consecutive years, making it one of the few dividend kings. The stock's current yield is 3.4%. Number 7. J.P. Morgan Chase & Company, JPM. On the list of the greatest dividend stocks for 2022, it might be too late. After all, J.P. Morgan stock has risen over 25% in 2021 and is on track to reach a record high. Over the same period, the largest US bank's main business has risen substantially. Banks like J.P. Morgan are thriving thanks to a burgeoning property market, rising stock market activity, and lower interest rates. Both the retail and investment banks are performing well. The bank still trades at just 10 times current year earnings. J.P. Morgan's allure is heightened by its legendary CEO, Jamie Dimon. The stock also pays a 2.5% dividend. Number 6. Raytheon Technologies Corp, RTX. In addition to Raytheon, Raytheon was founded by combining United Technologies and Raytheon. This entity spawned enterprises like elevators and air conditioning. Raytheon was left with a focus on aircraft, drones, satellites, and cyber. Raytheon's stock price has fallen far below the S&P 500 due to the defense industry's downturn. Raytheon is not solely a defense contractor, it also has significant exposure to commercial aviation and space. Analysts expect earnings to expand at a double-digit rate in the future. RTX stock also yields 2.4%. Number 5. Lockheed Martin Corp. LMT. The military sector had a bad year in 2021. Investors sold off the sector as a result of the Biden administration's decision to leave Afghanistan. Despite this, Lockheed Martin continues to win new contracts from the US government and international governments, cementing its position as one of the top dividend stocks to buy in 2022. Finland recently awarded Lockheed Martin a $9.4 billion contract for 64 F-35 combat fighters. However, the stock market is still in a downward spiral. Many institutional investors are no longer willing to buy companies that manufacture arms, according to the environmental, social, and governance movement. Because institutions are avoiding military contractors, ordinary investors have a lower entry point. Lockheed Martin pays a 3.2% dividend yield and trades for less than 13 times projected earnings. Number 4. Intel Corp. INTC. Technology companies aren't typically thought of as major dividend payers by investors. There are, however, notable exceptions, notably in larger companies. Intel's enormous and reliable semiconductor business for personal computers and data center machines makes it a cash cow. While these aren't particularly fast-growing markets, they are steady businesses that have benefited from pandemic-related demand. Meanwhile, Intel has taken advantage of its massive revenues to diversify into new, more futuristic industries in order to supplement its core business. One of these, Mobil, the company's self-driving unit, is a major driver for 2022. Intel expects to keep a controlling share in the company after it is spun off as a public corporation. As a standalone company, analysts say Mobil might be worth $50 billion or more, representing a massive return on Intel's $15.3 billion purchase price 4 years ago. As a result, Intel's capital expenditures will be reduced as a result, freeing up funds to reinvest in the core business or return capital to shareholders. Today, Intel pays a 2.7% dividend. Number 3. Toyota Motor Corp. TM. In recent years, most auto stock traders have focused on electric vehicle (EV) businesses. That's understandable, the developing electric vehicle space has seen a lot of activity and new product debuts. Traditional automakers, on the other hand, should not be overlooked. These companies already have massive customer bases, dealer relationships, and worldwide supply chain and logistics footprints. Some are even fairly advanced in terms of electric vehicle capability. For example, Toyota introduced the Prius, one of the first truly successful hybrid vehicles. Toyota revealed plans to deliver 15 electric vehicles by 2025 earlier this year. It will also invest more than $3 billion in battery production facilities in the United States. Without a doubt, Toyota will play a major role in the future generation of vehicles. Meanwhile, Toyota is already a very lucrative company that trades at only 10 times earnings. In addition, the stock offers a respectable 2.5% yield. Number 2. Enbridge Inc. (ENB). Oil and gas producers aren't the only ones reaping dividends from the energy sector. Midstream firms are in charge of the storage, transportation, and distribution of crude oil, natural gas, and refined goods. Enbridge may not be a household name in the United States, but it is a blue-chip stock in Canada, and the MSCI Canada ETF's fourth largest position, EWC. Enbridge owns one of North America's largest pipeline networks, and has paid consistent dividends to stockholders for decades. During the recent COVID-19 downturn, the company didn't decrease its dividend, in fact, it has increased it dramatically in recent years. While oil and gas prices fluctuate, pipelines are rather steady. Enbridge pays a dividend yield of 7.2% to its shareholders. Number 1. Exxon Mobil Corp., ticker XOM. The main oil and gas firms have had a difficult 7 years. Since the oil price collapsed in 2014, most energy corporations have had to decrease their payouts in order to stay afloat. The only exception was Exxon Mobil. Despite a short-term drop in profits, management maintained its hefty payout. Exxon Mobil continued to invest substantially in new oil, gas, and refining projects as well. Exxon's offshore Guyana oil field, in particular, has become one of the industry's most important new energy assets. Exxon Mobil is well positioned to benefit from the current rise in oil prices since it invested throughout the business cycle while most of its competitors cut back. Exxon Mobil's income appeal, on the other hand, is as strong as ever. The dividend is guaranteed, even if oil prices fall below zero in 2020, and the stock yields a healthy 5.7%. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.